average income right now in Toronto to afford a home is about 197,000, roughly.
Yeah.
And there's also a rule of thought, or a train of thought out there, where they say, buy where you could afford and rent where you want to live. Very important to buy your home. One, it's legacy building. It's something you could pass off to the next generation. Right now, the majority of Canadians' wealth is in their home.
Yeah.
So it's almost like a unknown savings. So don't shy away from the things that happen. You got to overcome it and keep writing your story.
What's up, folks? This is the Couch Connect. My name is Joab, and today I'm hanging out with Jeremy Gayle. Jeremy is a mortgage specialist. Jeremy, how you doing?
I'm good, thanks, Joab.
If I wanted to buy a home right now, I know there's many pitfalls, but I just want you to tell me, what is that one biggest pitfall that I should avoid?
So the biggest challenge I'm seeing right now is income and down payment.
Yeah.
So acquiring a down payment in today's market is difficult because, the average home is over $1 million, right? So saving up for a down payment could be challenging. There are options, especially if you have parents, grandparents who are willing to assist. Income is also a challenge because to qualify for those mortgages, it's going to take a good, I just read yesterday that the average income right now in Toronto to afford a home is about 197,000, roughly.
Yeah.
So you have to use things like a co-signer, being able to partner with others if you can't do it on your own.
Yeah.
So those are the biggest challenges. In terms of pitfalls, spending, buying things that you don't need, acquiring excess payments, lines of credit cards, vehicles.
Yeah.
Those really hurt your qualifying ability.
Yeah.
They really take a chunk out of how much you could qualify. So
Yeah.
I would avoid those.
And so is it possible also that folks are buying homes that they cannot afford?
It does occur. People are buying homes that is a bit out of their price point. And you normally see they go to alternative lending like private mortgages and things like that. It's not really the best avenue to go. You'll notice that a private is a more aggressive type of loan. They are basing your loan off of the value of the home and the equity in the home, and they're not really too concerned with your carrying ability of it.
Yeah.
So they're typically interest only. They're usually for 1 year, and they're great for short-term solutions and if you have a plan. If you're thinking you could do this for long-term, you'll notice that people are having challenges where you're just eating away at your equity and you're basically going down this rabbit hole that you can't get out of.
Damn. And I think very many people are going down that rabbit hole without knowing, or maybe sometimes knowingly.
What's happening is some of them don't have a choice. You're looking for a solution and you're overly optimistic. You think that maybe next year will be different, or I just need 6 months. But it's incredible how fast the 6 months go by.
Yep.
And a private mortgage is not something you could pay off in portions. They want it all. If they give you 100,000,
they want it all.
They want 100,000 at the end of the year. Yeah.
Yeah. So can't you go back and renegotiate?
For sure. There are times they will allow you to renew. There may be fees involved, renewal fees, admin fees, things like that.
Yeah.
Sometimes they don't want to renew because they make their money by putting it back out there. Or maybe you missed a few payments and you see more of a risk than they're comfortable.
Yeah.
A lot of that money is private money. It's also RSP money. So they have a fiduciary responsibility to protect their investors.
Yeah.
So they do call the mortgage sometimes and say, yeah, we need it back. We are not going to renew you.
Yeah. Damn. And I guess that becomes difficult for the person who's borrowed the money.
Yes. Because you need an exit strategy.
Yeah.
So they even did a whole course in 2023 where we had to do a private mortgage course because it became such a problem.
Yeah.
Agents were just giving private mortgages out without really having an exit strategy.
Yeah.
So they really wanted to nail that home. Like, before you give a client this, you need to know how you're getting them out.
Yeah.
Yeah.
I think that's important that, they did that, because it is possible that you have some unscrupulous agents out there too, right?
For sure.
Thank you very much, folks. If you're new to this show, this is the Couch Connect. Over here, I hang out with nice folks like Jeremy. And what we do, we talk about the science and art in everyday life experiences. So do subscribe to this channel and like this pod, and also tell your friends to tell their friends so that I can continue bringing you better guests like Jeremy here. We are recording this on the 6th of February in the year 2025. So it's Black History Month. And one of the reasons why I'm having Jeremy here is because we are celebrating Black professionals this month on the Couch Connect. So Jeremy, today I want us to talk about a couple of things around home ownership, buying homes, mortgages, whether as a first-time home buyer, somebody should go into getting a new home versus a resale home.
Right.
Yeah, and I think you're the best person to answer these questions. And I'm really happy that you have accepted the call to hang out with me on the Couch Connect today.
No, it was my pleasure. Thanks for having me.
So can you walk me through the process of buying a home?
Sure.
And the context here is in Canada.
First, just have a discussion. If it's you by yourself, I guess you don't need to talk to nobody. But if you have a partner, figure out if home ownership is right for you. Because it's, there's a few other things you got to think about when you're purchasing a home. Maintenance, upkeep, things that aren't into play when you're renting. But once you've decided like home ownership is the way you want to go, the first thing you should do is reach out to a mortgage broker. And what you want to do is be pre-approved. And I don't mean like these applications, you just enter some basic information and they spit out a number. Do a solid pre-approval where they really underwrite your file and they look at your credit. They look at everything and they tell you, hey, Joab, this is what you could afford. And then that way, when you reach out to the next step, which is to reach out to a realtor, you know exactly what your budget is and what you can afford. So when you're going out there and you're making offers, you don't overextend and you know exactly where you stand. Once you've done that, you reach out to a realtor. You and the realtor will go out and shop, see a property you like. You'll get a purchase agreement accepted, an accepted offer. Then you'll bring it back to the mortgage agent or mortgage broker, and then we'll submit it to get your mortgage approved. From there, you would go to a lawyer that would do a closing. And then you'll get your keys once it's all done.
When you narrate this story, it sounds like, I walk in the park. I basically walk in here tomorrow or, come and find you tomorrow and tell you, what, I already talked to my partner and we're looking at buying a property.
Right.
But I feel like, there's a couple of things in there that we always overlook. One of the very first steps that I think people will always skip is speaking to their partners.
For sure.
Why do you think it's important to speak to partners when we're buying homes?
It takes two hands to clap, my friend. Like if you are going into this thing, which is going to be the biggest investment of your life, possibly.
Yeah.
You do want to make sure you're on board with your partner and you guys are on the same page. Mm-hmm. So yeah, speaking to your partner is very important, especially when you need their income as well to qualify.
Yeah.
Then there's also the issue of down payment. Like, are you guys going to share the down payment obligation, or does one person have the down payment and the other doesn't? These are all things you need to think about. And there's also the flip side of the coin where you do want to have a discussion, because I've seen where people do buy a place together.
Yeah.
And I've seen the other side where they come back to me and say, Jeremy, we're getting a divorce now, or we're separated.
Yeah.
I need to buy my partner out. So you want to make sure you have the real good conversation before you invest in this big commitment.
Yeah.
And make sure you cover everything and you guys are on the same page and have a good understanding of what you're getting into.
There's something you said there, that this is going to be the biggest investment that you're probably going to get into.
That's right.
And I totally do agree, because many people are not going to spend $1 million out there buying anything apart from their home, right? I think it's important to buy a home, and maybe I would explain to my partner that it's important that we buy the home. But why is it important that anyone plans to buy a home, at least the residence where they live?
It's a personal choice. It's a decision that you have to make. But for me, I would say, yeah, it's very important to buy your home. One, it's legacy building. It's something you could pass off to the next generation. Right now, the majority of Canadians' wealth is in their home. So it's almost like a unknown savings. You're paying down this mortgage and your home is going up in value. And I'm seeing situations where people are able to lean on the equity in their home to help them in retirement, also pull out down payments to help their children. And it's all coming from this home that you purchased that has appreciated in value, where you have all this equity. You can't do that if you're renting. Also, they're not making any more land. Yeah. So if you don't buy today, and that's the thing we don't talk about a lot, time. Yeah. If you bought in 2008, you're getting a 4-bedroom for around $350,000. Today, what are we looking at? 1.1, 1.2? So the longer you wait and the more time you take is the further that this dream gets away from you. So I do think home ownership is very important. And I think that it's something that people should aspire to do.
I'm going to follow this up with another question here. When's the best time to buy a home?
For me, what I'm noticing is once you've been, like, if you go to school, you graduate, you want to wait till you're in a stable employment, a job that you've had for at least 2 years.
Yeah.
You could do it your first year, but you just want to know that income is stable. And once you're there and you look at your budget and you feel comfortable knowing that, I'm paying this amount of rent, I could be putting this on a mortgage. I want to go into this venture of looking at home ownership.
Yeah.
Then do your due diligence. Speak to a mortgage agent, a mortgage broker. That's the best time to do it. Once you have stable income and you're ready to go, that's the best time to do it. And this is the other thing. If you're young and you're living at home and you're okay living at home, still buy a home and rent it out.
Yep.
Because it's there. It's an investment.
Yep.
It's, going to be turning over revenue for you as a rental property. And then later on, if you decide you want to move out, that home could always be there, or maybe you'll buy another home.
Yeah.
Yeah.
So there's this thing that I hear, buyer's market or seller's market. Right. Is it possible for you to describe those two terms, what they mean?
So a buyer's market is when the market is in the favor of the buyer. So right now, condos, we're having a situation with condominiums in the GTA where there's a influx of condos.
Yeah.
There were some changes to, laws that are not allowing certain kinds of rentals anymore, foreign buyer banned. So you're noticing that more condos are on the market. Plus there was saturation of new builds going up. So it's just simple supply and demand. We have a lot of condos and not enough buyers.
Yeah.
So now the pricing is kind of getting depressed and it's going down a bit. So condos are on sale right now. So it's a buyer's market. You could go out there and get a good deal on a condo right now. When it's a seller's market, it's when there's so many buyers and there's not enough listings. So now we have 20 people bidding on one property. So you notice things where I got to go up, do a firm offer. A firm offer is when you don't have the conditions that protect you. So normally you would do an offer and say, I want a condition subject to financing, meaning I need to make sure I'm going to get approved for the mortgage before I commit.
Yeah.
And then they allow you to back out of the deal if you don't get the financing.
Yeah.
Subject to it, inspection. If you're doing like a condo, there's a status certificate where they review it to make sure the condo is in good health. All those conditions help. But when it's a seller's market, you'll notice that they're waiving all those conditions. You're going firm with no protection for yourself.
Yeah.
And those are the real differences.
So when there's no protection, what does that mean? What happens to, let's say if I'd put a down payment on the property or I'd promised to put a down payment on the property, what happens to that?
We got to close on that condo or that property. So once
so I basically got to pay for it.
You're not getting your down payment back. There's no way out. We got to finish this transaction.
Yeah.
And that's when you get into situations where if you're not approved and you're not able to get a standard mortgage, we go back to those untraditional ways of financing, private mortgages, things of that nature.
And what happens to whatever agreement that we have?
Worst case scenario, you'll lose your deposit.
Yeah.
And if, and then the seller could even turn around and sue you because a lot of the times the seller is dependent on that money that you're supposed to be giving them with the sale of their property so they could go and buy their new property, right?
Yeah.
So it's like a domino effect. because you weren't able to meet your obligation, they're not able to meet their obligation, and it's just damages.
Yeah.
So it could become very challenging and very a difficult road to go down. So
what? Real quick too.
Yeah,
from what it sounds like.
0 to 100 real quick.
Yeah.
So what I would say is, this is why you speak to a mortgage professional.
Yeah.
So you know exactly what you could afford, and make sure they have a mortgage plan in place for you.
Yeah.
Before you make that decision.
What is your mission to the world?
That's a big one.
Yeah.
I would say my mission is basically to break down finances, set up people for success, people who are looking to get into home ownership, help them, people who are in home ownership, show them how they could become investors, and just give them good information and knowledge so they could make informed decisions. In a world where it's hard to trust people, I just want to be a source that they know they could come to and get the truth.
What you kind of alluded to is that this is a buyer's market right now.
That's right.
And so you would advise folks to go out into the market right now and buy as much as they can.
As much as you can afford.
Okay. As much as you can afford. That's the most important part.
Yeah, don't overdo it.
Because if you overdo it, then you run into many other financial problems downstream.
That's right. I want you to succeed. I want you to do well. So I'm not going to tell you to do something you can't manage.
Yeah.
Yeah.
All right. So how much should I really be saving down for a down payment?
So there's benefits. I don't know if you're aware, there was new rules implemented last December where anything over $1 million, you're able to do all the way up to 1.5 million, you're able to do 5%. Before it's capped at 999,000,
Yeah.
Any just under $1 million, 1 cent under $1 million was the max for 5%.
Yeah.
Anything above that, you would have had to have put 20% down.
Yeah.
You do have that ability now to do 5% all the way up to 1.5. But the question of down payment, it's really personal. It's like what's best for you. Are you able to do 20? If you're able to do 20, I would always suggest, unless you have a plan of doing another purchase later on, or we would have to sit down and actually look at your situation and what your goals are. And that's how we would know. But 20% down allows you a little more flexibility with the mortgage financing. Although you do get a better rate when you do insured, which is less than 20% down.
Yeah.
You'll notice that the rates are better because the mortgage is insured, so the lender is protected.
Yeah.
And they are able to bundle it.
So what does that mean when you get insured?
So when you do less than 20% down, so typically a lender wants 20%. So that if they ever have to sell the property, there's enough equity in the home that they could recoup everything and still pay the costs for the realtors and whatever legal fees are involved with having to take the home back from the person who defaulted. When you have less than 20%, there's no cushion for that. There is no equity there. So what they're able to do then is have it insured. So you do pay an insurance fee when you do that. So they put it on the back of your mortgage, and it's for the bank. It's not for you. The insurance is to protect the bank. So what they'll do is you default, the bank gets their money back.
Yeah.
And then the insurance company will sue the the borrower, the person who defaulted on the mortgage.
Yeah.
So the bank is protected. They're okay. And then you will now have to deal with that situation.
Okay. So I know folks probably wonder this all the time, but maybe let me build onto this question here. Right. So we got to think about affording a home. So first of all, how can I afford how much of a home I can really afford? Right.
So a rough number or a rule of thumb that we use in the industry is usually 4.5% of your salary is what you could afford.
Okay.
So if you make 100,000, your mortgage is around 450,000. Yeah, rule of thumb. There's other factors involved. Everybody's a little unique, but that's a good rule of thumb.
Okay.
So, yeah.
So what I was leading to here is testing. If a home right now, I mean, the GTA in the Greater Toronto area right now, homes are going for about $1 million, right? And 1.1 million is the average price. So if homes are going for 1.1 million,
Right.
it means that I need to have an income of at least 250,000, 220,000 ish
Yes.
in order to afford a home in Toronto.
That's right.
Then doesn't that lock out a lot of people from
Sure.
ever affording homes?
The truth is, gone are the days where you could just work one job and think that it's going to be enough for you to sustain. We have to tap into our entrepreneurial mind and have a side hustle. You know, you work your 9 to 5, you come home, you have something you're doing on the side, have something else that's generating income, or you gain the knowledge on how to invest and how to create another source of income for yourself, because it is challenging. And I don't want to sit here and make it seem like it's not, or downplay it and make it seem like it's easy. It is challenging.
The tangent that I was going to take here is if people can coalesce their incomes together
Right.
and buy a home
Right.
for one of the people who have coalesced their income together. If we can afford to pay our rents, why can't we afford to pay our mortgages?
Right, understood. Yeah, it's a good question, and I get where you're going. So you want to know, why don't we work together and then buy one home, and then after a while, those two families, help the other family buy a home, and then you keep it going like that. And some communities are able to do that, and they are doing that, and we see that a lot. But sometimes it's a little more challenging. It's a good question, and it's doable, but you got to find the right people who will stick with you, and because it could go bad, but it's a good plan, and that's what we might have to start doing more of, because with the challenges of affordability and down payment and things like that, we are going to have to start being creative. And maybe your first property is an investment property. You buy somewhere you could afford, you rent it out, and then that allows you to, save and build some equity. So when you do need your personal home, you could pull from that as well. And there's also a rule of thought, or a train of thought out there, where they say, buy where you could afford and rent where you want to live.
There's this notion of first-time home buyers making mistakes versus people who've bought homes a couple of times, avoiding those mistakes.
Right.
So what are some of these biggest mistakes that you've seen in your career that are typically made by first-time home buyers?
Okay. First-time home buyers, one of the big mistakes is purchasing like a vehicle before you close, changing jobs. Not to say you can't. You're able to change jobs if you're in the same field.
Yeah.
You're making more money, and it's a better position. We could argue that, and the lender will accept the majority of the time. Sometimes going out there and doing a large purchase, and it shows up on your credit bureau, the lender finds out, you no longer qualify. The other thing that people don't think about is down payment. Down payment becomes very tricky when it comes to closing. So if you have an account and then you move a large sum of money from one of your accounts to another account, typically lenders want 90 days bank history of that account. And now you have all these transactions leading into this account. They want 90 days from every source account.
Okay.
So it just becomes this...
So you don't want to go and talk to your uncle, your cousin, your brother to tell, hey, man, I need $100,000 or $20,000 to put in my down payment, and I'm doing this in, 2 months to closing.
No, you don't want that. You want the money to sit in one account, and you want it to be there for at least 30 days.
Oh, 30 days, not 90 days.
Sorry, 90 days.
Okay.
There are times where they'll allow you to do 30 days. It depends.
Yeah.
But ideally, if you are, they typically want a gift from close family members, brother, sister, mom, dad, grandma, uncles, cousins. Not all lenders will accept that.
Yeah.
And you could get a gift letter to explain that.
Yeah.
But typically you want the money to sit in the account 90 days. Don't move it around. No large, if you do large deposits, you got to explain it.
Yeah, you got to explain where it came from.
you did crypto,
Yeah.
you know, you won the lottery. We got to know where this money came from. And especially since last October, they're really cracking down on money laundering.
Yeah.
Yeah.
And because people are using, real estate market, to launder money,
Yes,
right?
that's
Yeah,
right.
I do agree too. I mean, I've seen it a couple of times, on the news at least. So you said earlier on that the first thing I should probably do is to get pre-approved before going house hunting.
Right.
So is this something that we see first-time home buyers doing at the same time? So they go out and look for a property before they are pre-approved?
Typically, a savvy realtor will tell you, did you get approved by the bank? And if they don't have an approval, they'll suggest, okay, go to the bank or speak to a mortgage professional.
Yeah.
Because they don't want to waste their time either. What's the sense of taking you around to different neighborhoods, looking at different houses that you're not going to qualify for?
Yeah.
That's their time. That's their gas. So a savvy realtor will tell you that information up front. Where I do see a lot of traps is new construction. So you just go to the builder. The builder only wants to know that, hey, can you make these deposits? I need this amount by this date. Can you manage this deposit structure? Once you're able to do that, they'll eventually ask you for a pre-approval letter. Some people just get one done or whatever. But then when it's time to close, they realize, oh man, I really couldn't afford this new construction.
Yeah.
And that's when I notice they get in trouble.
And so what happens to folks like those? Do they lose the down payment they already gave, to the developer?
So there's a few ways out. Like some developers, builders allow you to do an assignment. So you got to let the builder know and they have to approve it. And then you could, basically sell that contract to somebody else and you could get your down payment back. Sometimes they don't allow assignments and sometimes you can't close and you do lose your deposit.
Yeah.
Yeah.
Is it possible to require the builder or the developer to include a clause for assignment in your agreement with them, even if they didn't have it there before?
Typically, they would have it in there.
Okay.
And you would know, like, this builder is okay with assignment. This builder doesn't accept assignments.
So let's say they don't have it in there.
Then,
You're screwed.
Yeah. And if they don't approve it, then... And for the builder, it's okay because they keep your deposit and they're going to sell that unit anyway.
Yeah.
So it's a win.
For them and a lose for... So wouldn't we say that most of the time, the buyers are the ones who are screwed?
Yes.
Especially with new developments.
That's right. So it's always good to speak to a mortgage professional. So you could get these kind of instructions and things to look out for. Because, that's where I notice people get in trouble. It's new construction. Typically, the realtors are pretty savvy. They have their team. They have their mortgage broker. They have their lawyer. They have all the things that a client will need to complete the transaction.
Okay.
Yeah.
So I know there's many tiers to or factors that do affect interest rates. Is there a difference between the term interest rate and the annual percentage rate, APR?
Yes.
Okay, so what's the difference?
So the interest rate is what you pay. That's what's used to calculate your monthly payment. APR is when we sit down and we look at your interest rate, your legal fees, if you have to do an appraisal, any cost that comes into play with you acquiring this property gets added to your APR. And it's a way for you to judge, okay, was I getting a good deal or not here? So if you have an interest rate of 5% and your APR is 5.1, you didn't have that many fees, right?
Yeah.
It was pretty decent there. If you have an interest rate of 5% and now your APR is like 7, there's some fees in there. You might want to look at what is bumping this APR up that much.
Yeah.
Yeah.
All right. So then how can I get a good interest rate?
Right.
Or maybe even before we answer that, what are the factors that affect interest rate?
Well, there's different. So, there's two types of interest rate. We have fixed and we have variable.
Yes.
So variable is affected by the Bank of Canada. They meet 8 times a year. They decide, are we going to raise the rate, keep it the same, or lower it?
Yeah.
Currently, we're in a transition where rates are coming down.
Yeah.
We came out of a pandemic where they
Everything
lowered rates and then they started raising them rapidly.
Yep.
Now we're starting to kind of get that balance back and rates are going down. So the Bank of Canada determines the overnight lending rate, which is what banks borrow from, and they usually charge a premium, and that's how we get our prime rate. And that's how variable works.
Yeah.
Fixed is a bit different. It's based on the bond yield. So the Bank of Canada's bonds determine how much the interest rate will be on a fixed.
Yeah.
So it's a totally separate thing. And what you want to do is look at what the current fixed rates are, what the current variable rates are, determine, are you okay with risk and fluctuation? If you're okay with your rates going up and down based on what the Bank of Canada does, then variable might be the best thing for you.
Yeah.
If you just want to know what you're going to pay, I don't want any changes, Jeremy. Keep it the same. I want to pay this for 3 years and don't want any surprises. Fixed is more appropriate for you.
Okay. What would make me want to take the variable rate then?
There was times where variable was consistently better than fixed. If you looked at over the years how the variable was panning out.
Yeah, it kept coming down.
You were saving money on a variable. Also, the benefit of variable is, let's say you did a 5-year term where you're locked in for 5 years. You could break your variable and only have to pay 3 months interest payments.
Yeah.
So you know your mortgage payment is 2 parts, interest and principal.
Yeah.
So you only have to pay 3 months of the interest and you're free to go.
Yeah.
Whereas a fixed, they charge you something called interest rate differential. It's a complicated formula they use, but the bank basically gets their money that they needed to make off of you. And it could be hefty, 20,000 and up sometimes.
Yeah. Do people get into mistakes whereby they end up choosing the wrong interest rate, and at the same time, are these options given to home buyers? Are they told, you can either go to the fixed interest rate, or you can go to the variable interest rate, or are they told, from the get-go that, this is the only rate that we're offering you?
So typically, what we'll do is there's a process where we call know your client. So we'll ask you these questions. Okay, are you more conservative? Do you want to know what your payment will be? Are you okay with risk? Here's what's happening in the market right now. And we let you determine, because only you know. Then also, is there any chance of you wanting to break your mortgage in the next 2-3 years? Or do you see yourself staying to the end of the 5?
Yeah.
Do you want a 5? So there's so many questions that go into your mortgage. And I try my best to make sure I cover all those bases with you and educate you on what the differences are.
Yeah.
So if I know you're going to, you know what, Jeremy, I think I want to break this mortgage into a refi in 2 years.
Yeah.
I'm not going to give you a fix.
Yeah.
Unless it's a 2-year fix and we align it with the time that you think you're going to need to make a change.
And I think what I'm getting here is that, as a mortgage specialist, you become very friendly to your client then and help them in actually making that decision.
For sure.
Because I think that every, average human, is probably not able to, wrap their ideas around all this, all these things that are going on with their finances. And so typically, would you expect that when a client comes to you, they are open with you and tell you everything and not hold anything back?
Absolutely. Like, that's the only way to work. I'm kind of like your lawyer.
Yeah.
You have to tell me where all the bodies are. Like, you have to tell me everything because I represent you. So one of the things about mortgages that people don't understand is it's not just numbers. I have to present you in the best light to the lender.
Yeah.
I have to tell your story that reflects you in the best light to help you get that mortgage approved. So if you don't tell me something and then the lender discovers it and I don't know, they're saying, well, Jeremy, you don't really know your client. We need to look a little deeper. So it's better that you tell me and we get in front of it.
Yeah.
Hey, there was a time where the client was going through a situation and he fell behind on his bills. Oh, they were going through a divorce. There was a death in the family. We have to tell your story to the lender in a way that they get, okay, yeah, there's some hiccups here along the way, but there's reasons for it. And I suggest that anybody working with any mortgage professional be upfront.
Yeah.
And it's different with us than when you walk into a bank. A mortgage broker, a mortgage agent asks you for all the documents, and we look at it and we say, okay, we were not going to use this. This is not helping you. Okay, but we'll use this.
Yeah.
So a prime example would be your NOA. Okay, maybe I won't use your notice of assessment.
Yeah.
It's not going to help you out.
Yeah.
But let's use your T4s or let's use your pay stub in a job letter.
I think you've said something important there. So let's backtrack a little bit.
Yeah.
So why are we not using my NOA or my T4?
Right.
Or, why are we not using this and using this?
Right.
So you said, an instance you said is that this NOA is not helping you.
Yes.
The T4 is going to help you. So why would my NOA not help me? Why would my T4 help me?
Sometimes there's write-offs that's showing up on your NOA.
Yeah.
Your NOA is where you're supposed to declare, like if you have investment income, rental income. Sometimes those things could work against you in your application.
Yep.
And it's too much information. So it's better to just go with the T4.
Yeah.
We package it the way that it's most beneficial for you. Yeah. And that's really
because sometimes too much information might be
deal, yes.
might be dangerous. Yes,
that's right.
Yeah. And so why do you think that sometimes maybe people fear mortgage specialists or mortgage brokers, and they just decide to walk into the bank by themselves?
It's a lack of understanding. They don't really get what we do, and I always get the question, well, how do you get paid? They think there's some nefarious or like some secret agenda that we have. But it's really just to look after you and a good mortgage agent and a good mortgage broker, the job is to look after you, make sure you get what you need. And the job is changing. We're not just getting you a mortgage anymore. We're understanding your finances on a deeper level, and we're almost financially planning for you and making sure we're getting to you where you want to be. Yeah.
So there's something you said here, and let's dig into that too. So how do you get paid?
So typically on an A deal, so there's levels. We have an A deal, which is we take you to the standard bank, TD, Scotia, any of the A lenders. We have monoline lenders as well. Monoline lenders is the same as a bank. They just don't do checkings and savings, strictly mortgages. Yeah. Right? They pay us for bringing you. So there is no fee to you. The only time we charge is if you do something over and above, meaning there's a lender that you need, like a private, that doesn't pay us. We need to be compensated for our time. So we do charge a broker fee. Typically, for the most part, we don't need to charge because, the lender will pay us.
Okay. Are there particular red flags that I should look out for when trying to work with so let's start with the lenders first. So what red flags should I be looking out for when, walking into a bank or, I've been advised to work with this lender? And then the next question is going to be, what red flags should I look out for when working with a mortgage broker or mortgage specialist?
Right. I would say the first thing and the most important thing is understanding what you want, what you need, understanding your financial needs. And then the problem that we're having right now is everybody's so focused on rate.
Yep.
But there's so much more to your mortgage than rate. So you need to work with someone that understands that as well and doesn't just try to lure you in with the lowest rate. Because you may save on your monthly, but then if you have to break your mortgage, the penalty is huge. Or maybe you move and you want to port that mortgage and now it's not portable. So there's all these features.
What is porting a mortgage?
So if you have a home and you want to move your home, you move, I'm able to take that mortgage and put it on your new home with you. If you need additional, they do a blend and you basically don't have to break your mortgage. Not all mortgages are portable.
Okay.
So there's features like that. Amortization is important. Your term, like what kind of mortgage, fixed, variable, penalties are huge. Things like that. People need to really think about, not just rate.
Yeah.
So when you come in, you probably won't know all the lenders because that's a full-time job. That's what we do, right?
Yep.
So I would say, for the most part, the majority of lenders are reputable. We do a really good job in Canada managing the lenders. There's OFSI and there's these governing bodies that make sure they do what they're supposed to do.
Yeah.
Privates are a little different. So you want to make sure that it's an actual bank that you're going to.
Okay.
For a mortgage broker or mortgage agent, you got to do your research. Do a Google search. Check out what brokerage they're with. What's their years of experience. Do some Google reviews. What does their Google reviews say? And make sure you're dealing with someone that's trustworthy and reputable that will take care of you.
Yeah.
Yeah.
Because sometimes you might end up with just a person who's not, who doesn't have your best interest at heart.
That's right.
Yeah.
Yeah.
And how reliable are the Google reviews?
I mean, for sure, there's ways that people could do their own reviews and stuff like that, but that's just one way. Like, you could also look at the mortgage agent's license number, make sure they're licensed. FISRA, you could pull up their license number and see, okay, is this person actually legit? Is there any complaints on them? Things like that, as well as Google reviews, should help you.
So when trying to buy a home, sometimes I think, let's say you've had a bunch of bad years or a bunch of bad expenses, and maybe your credit score has been hurt.
Right.
So typically, how long would it take to repair a credit score so that you can be able to afford a home?
Most banks, if you have a bankruptcy or a consumer proposal, they want you to wait 2 years before you can apply for a mortgage again. And the thing that we do wrong is something happens. Like, life is always lifing. Like,
Yep.
something could always happen, right? That's why it's life.
Mm-hmm.
So we're saying, like, life happens, right?
Yeah.
Anything could happen in life where, you have a situation where you do fall behind on your bills. You could be getting laid off. There could be illness. There could be a death in the family. So many things could happen. The thing that we do wrong is, once we have this situation, we kind of hide.
Yeah.
We don't, there's a level of embarrassment. There's a level of shame, and you just shy away from credit. But credit is just a story.
Mm-hmm.
If you stop the story there, it's just a bad ending.
Yep.
So what you want to do is reestablish your credit. When you get back on your feet, pay down those debts that, were written off. Go back and see what you could do and correct them. Also, start establishing new credit. Get a pre-approved card and start making payments on that. As soon as you use it, pay it off. Go to the grocery store, use it, pay it off. Go to the gas station, use it, pay it off. It starts writing a new story. And then when you get to a situation where you're applying for a mortgage, you could say, hey, this was what happened then, and it was a rough time for me, but I'm back on my feet now. And here's where I am now today. And that would help you so much.
Yeah.
So don't shy away from the things that happen. You got to overcome it and keep writing your story.
Yeah. And typically, how long can I, do this to kind of, rewrite my story?
Depending on,
let's say, apart from, bankruptcies and stuff like that. So let's say it's something as simple as, I didn't pay my my credit card for a couple of months.
Right.
And I was probably taken to collections.
Right.
So how long would it take me to get out of my, my pits?
Typically, if you go back and you settle up with the collection agency, you pay back everything and do your best to, rectify that situation. Mm-hmm. And then you start reestablishing your credit, like I said, through a pre-approved card.
Yeah.
You'll notice your credit starts going up.
Yeah.
Within 3 months.
Mm-hmm.
There'll always be that history, but then we'll have to explain. Well, this is what happened during that time.
Yeah.
The client did go back and make it right. They fixed it.
Yeah.
That's how it works.
Okay. While people are trying to repair their credit scores, it is possible that they're making mistakes too.
It's true.
So what are some of those mistakes that people could be making when trying to repair their credit scores?
So the most important thing is paying your lines of credit, your credit cards as agreed. So if you're supposed to pay every month this minimum amount, you want to pay it before the due date to make sure that it's in there. So you're establishing good credit history. That's the most important. The other thing that people don't know about is utilization. So if you have a credit card and there's $5,000 on there, that's your limit. You don't want to have like 4,500 on there.
Yeah.
You're exceeding your utilization limit. Now you're looking like you're really depending on credit.
Yeah.
So to the lender, it looks kind of, okay, this person is really relying on his credit. So what's happening here? So you do want to keep it below that half mark or just right at half.
Yeah.
And then that's one of the major things. The other thing is like credit card history, like in terms of length. How long have you had this account for? They want to see long accounts that have been there for years with good payment history. That helps tell your story. Yeah.
Some people decide to pay their mortgages faster.
Yes.
Is that something you would advise them to do?
For sure.
Okay. Yeah. So how can someone, pay their mortgage faster without hurting their cash flow?
Banks are becoming so savvy now. They're allowing you to do prepayment. The majority of them do 15 to 20% prepayment. You could do it multiple ways. Say you get a bonus from work, you could apply it to your mortgage as a one-time lump sum payment.
Yeah.
You can increase your monthly payment. You could do accelerated bi-weekly payments, or at the end of the year, because of the amount of weeks, you're able to get another extra payment in there, and you won't notice because it's just bi-weekly.
Yeah.
There's lump sum payments, like I said, if you have a bonus or something like that, and all those things help. There's more advanced techniques as well, like some tax efficient ways of doing it, especially if you have investment properties, but it's a little more in depth.
Okay. So first time home buyers, I mean, I keep referring back to first time home buyers because I think that I've seen a lot of marginalization, especially in Black communities, and this being a Black History Month, and you being a mortgage specialist who has vocally said that they do appreciate communities who are marginalized. I think it's important that we talk about this.
Right.
Yeah. So there's no general pros or cons in buying a house versus buying a condo.
There's like typical things like condo fees.
Okay.
Space. Do you want more space? Are you okay with being in a condo? Where it's usually, more of like a high-rise type of situation, or do you want like a townhouse condominium? Most of the things I feel people complain about is even when you pay off your mortgage, that condo fee is always there.
We're still running.
So there's things like that. But again, that comes with personal choice. If you're okay with that, maybe you don't want to shovel snow. Maybe you don't mind that the condo corp has somebody coming around and shoveling the snow for you. It all depends on your personal situation and what you want.
Something I realized here, we should probably define what a condo is.
Right.
That's what a house is.
That's right.
So what is the difference between a condo and a house?
A condo is like, so there's different types. So there's like the tall high-rise condos. And then you also have townhouse condominiums. But basically there's a corporation that manages shared expenses, and they manage it like a corp. So you'll pay a maintenance fee every month that goes towards making sure the parking garage is in good shape. The windows need changing. They had graffiti, so they power wash the side of the building. It takes care of the shared amenities. Shared amenities. And what they're doing is like things like the exercise room, the pool, anything that's in the condo that's shared. It kind of covers all of that. Townhouses, it's usually maintenance. You make sure that the walkways are shoveled. It's being taken care of. The landscaping, things of that nature. Whereas a house, or what we would say is a freehold, meaning there is no condo corporation. It's you by yourself. That's really it. You're in charge of your own expenses. You don't pay it to anybody. It's all on you.
Okay. Are there any advantages or pros and cons in buying a new build versus buying a resale property?
Well, now the government just did the rule change in December where if you're a first-time home buyer, you could get 30-year amortization, whether it's a new build or not. But if you're not a first-time home buyer and you're buying a new build, you could get 30-year amortization with less than 20% down.
Okay.
So that does help, right? In terms of just personally, is there a benefit? I mean, it's a new home. You'll be the first living in it. You get to pick the finishing and things like that. But again, those are all preferences. It's personal things that you would have to decide if it's, what's best for you. Is there a right way to go about doing a home inspection? Home inspections are usually done with the realtor, and it's very important to do a home inspection. That's when you find out, is there mold? Is there asbestos? Was there a leak? Is there something wrong with the foundation? If you don't do the inspection, you have no idea what you're buying and what you're getting into. It's very important that part of your process when you're buying a home is to do an inspection. even in new builds, they do have a form of an inspection where you do a walkthrough and you look and you make sure everything is right, because there's sometimes a crack in the foundation. So even not just because it's from the builder means it's going to be perfect. You always want to make sure that what you're buying is in good shape and it's covered. And then they have things like the carry-on warranty for new homes, new builds that cover you in case of something like that.
Yeah. And so is there a right way to do the inspection then?
You just get an inspector.
Okay.
So a reputable inspector with experience. A realtor, a savvy realtor will have one that he knows and he'll recommend that. That will be a part of his team. So most professionals who've been doing this long enough, we have a team. I know good realtors that I would refer to you. Good realtors know good mortgage agents that they would refer to you. We know good lawyers. We know good home inspectors. We know good appraisers. And it just comes from experience and being in the industry for a long time.
So something that just got into my mind right now. So let's say something happened in my home. Maybe there was a fight or something, or somebody had a sledgehammer, and they decided to break down a wall. A weight-bearing wall. And, I get somebody to fix it, or I fix it myself. I get a bunch of wood, and then I plaster the wall with, drywall. Are there tools that can see beyond the drywall to see what's going on inside the wall?
So, to be honest, that's out of my scope.
Okay.
That would be more of a home inspector question. And I'm not sure of the tools that they're using these days. But yeah, I've been seeing some amazing things. They're really savvy. They're able to tell you there was moisture in here. They're able to kind of see behind the walls. Like the things they're able to do is pretty interesting. So,
So it's okay that you may not be able to answer the question, but maybe you may be able to answer the next one. Which is, so let's say there's these things that are concealed beyond the wall. And maybe they need really specialized tools to see them. Or for some reason we miss them because they have been nicely concealed. But then 5 years down the line, 2 years down the line, a month down the line, they show up. And, the property starts breaking down. Do I have any recourse here? Can I take this person to court, whoever sold me the home, and, say that you concealed this? Or would they come back and say that you should have got an inspector to see beyond the concealment?
This is why you need a good home inspector. Because once that's done, it'll be really difficult to go back and have any kind of recourse. So getting a reputable home inspector with good experience and the right technology, that's your best way of defending yourself against something like that. And they're really good. Like the things I've seen found and written in reports, I've been astonished to say, wow, man, you guys really do your job.
What is the difference between buying an investment property versus buying a residence?
So for an investment property, it's automatic 20% down. The other thing is the rental income could be added to your income to help you qualify.
If there's people living there already, or even if there's no people living there.
Even if there's nobody living there, we do what we call a fair market assessment. So we'll order an appraisal. The appraiser will go out and say, hey, based on what's happening in this area, this is what this unit would rent for. If it's a multi-unit upstairs, downstairs, they'll be able to tell you, okay, legal basement, retrofitted, all right, this is what they would rent for. This is what upstairs will rent for.
Okay. And so there's something you said earlier. Buy where you can afford. Rent you can leave. Rent where you can leave. So is it possible to buy a property in a city that I've never visited before? So let's say, a city like Timmins up in, the north, or, St. John in Nova Scotia. Sorry, St. John is in Nova Scotia? Or where is it? St. John's in Newfoundland. So I've never been there before. So can I go and buy an investment property there and live in Toronto?
Absolutely. So this year, well, not even this year, for the last couple of years, Calgary has been the hotspot. A lot of people have been going to Calgary and they've been buying and investing in Calgary.
I've been seeing that, yes.
And some of them have never left Ontario, but they own properties in Calgary. What I would say is you should know your market, do your due diligence, make sure you understand what's driving that community, what's bringing in jobs? Are there any new developments, new highways, stadiums, employers coming there? Do your due diligence and understand what allows your property to generate the best income, vacancy rates, things like that.
Yeah.
You want to make sure you're buying in a good neighborhood that is going to allow you to get the best rents.
Okay, so it's really up to me as the buyer to do my homework. There's no tools out there that I can use to kind of, make my work easier.
I mean, we're living in a world of AI and stuff, so I'm pretty sure you could get something going. But off the top of my head, no, I don't have a tool that I could think of. I'm still old school. We go out there and we do the groundwork, we do the research. What's the population? Doing all the legwork normally. Yeah.
Again, going back to the fact that this is Black History Month, historically, Black communities have been, facing barriers to home ownership.
Right.
There have been, redlining. There's been discriminatory lending practices.
Right.
Do you see any remnants of this in the industry right now?
There's nothing blatant that I see.
Yeah.
I've heard stories in other countries where when you're selling a home and they see it's a minority home, there's pictures, they appraise it lower. I haven't seen anything like that since I've been in the industry.
Yeah.
I'm not saying there isn't. I'm saying from my experience, I haven't seen anything blatant. What I do see for our community is a lack of knowledge.
Yeah.
We need to understand home ownership a little better. We need to understand finances a little better. When we're going to school, they're not really teaching you about financing.
True.
Yeah.
True.
So we have to do our homework and get up to speed, because there's so many things that are allowing other communities to thrive. Understanding home insurance, estate planning, life insurance, just different things that will help you out financially. Investing, even from a young age, getting a life insurance policy, things like that. We're really falling behind on that because it's not spoken about.
Yeah.
And we need to talk about that more. And I do see a shift. I see it's changing.
Yeah, I think especially in the younger generation.
We're starting to wake up. And we need more of that.
Yeah, true. Yeah. I also do agree. Going back to the fact that, I still think that there's been, historically, at least maybe not in Canada, but historically, you can see, nuances of this in different places. There's been some sort of discrimination. Right. Do you know of any specific programs that are targeting this minority community, so specifically the Black communities? Are there any, programs, from either from lenders, from the government, or from NGOs that are targeting Black folk and enabling them to own homes?
Right. There was one. Oh man, I can't remember the name now. This is horrible. It was like the True North or the Black North initiative. Yeah. Where they were looking at getting grants to help minorities get into home ownership.
Black North, isn't that owned by this there's this guy?
King of Bay Street.
Yeah, King of Bay Street. Yeah, it's owned by him, eh?
Yeah, West Hall.
Yeah, West Hall. Yeah, I've been trying to get him on the pod, man. It's been difficult.
It's funny, we just met West Hall. Well, Stefan was there. We met West Hall last month. He actually started out in this neighborhood in Mountain.
Oh, cool.
Yeah. So he mentioned that during his fireside chat, and I thought that was very interesting.
Yeah.
If he could come from this neighborhood and make it to the heights that he's reached, then anything is possible.
Yeah, and I think, what he's doing out there is helpful, and hopefully we can get more folk like that, out there doing what he is doing.
Yes.
And, it's same as to what you are doing, because I think, having you in your position and being willing to share this information with folks is very important. Because like you said, people don't know this information, how insurance works,
right,
and stuff like that.
That's right.
And like you said, it's not taught in schools,
right,
and maybe it's not something we talk about, on our dinner table, right?
It's true.
Yeah, so I'm going to shift gears a little bit and, talk about you. And maybe there's folks out here want to become like you in the future. But just before we get to that, do you have any story of a person that you helped to get a home and left a really big mark in your heart?
Yeah, there's so many. It's a few. The one that stood out to me first, as when you start in this industry, you're thinking about, man, I'm going to make all this money. I'm going to drive a big car, a nice car. You're thinking about all the material things. But there was a couple that I met, and the husband lost his job about a month before. and then the wife lost it like maybe a month after. So they were in trouble, and I don't remember where they found me, but they called me and they're like, we need help. And it was a lot, because it was, people that look like you, they spoke like me. They were of Jamaican background. They sounded like my aunt or my uncle. And you're seeing that, they're really in trouble, and they're depending on you to find a solution. And these people's financial future is in your hand. And that really woke me up to really see, like, no, this is not about the money. This is not about the cars. This is about the people. And you got to know your stuff and be able to get them in and out of difficult situations. And you got to learn your mortgage techniques and everything, the rules in and out. And I was able to help them. I was able to get them a quick little mortgage, a private. Then I got them over to the B side, where we were able to restore their credit, build it back up, and now they're back with an A lender. So there's that. I also, there's a lot of stories. We could have multiple podcasts about that.
Yeah.
Yeah.
And so when you move someone from, say, private to B to an A,
right?
Do you do this over a long period of time, or is it over a couple of months, or is it over a couple of weeks?
It's usually a year in every stage.
Okay.
So a year in a private, a year at a B lender.
Yeah.
By then I should be able to get you back to an A lender if you do everything I ask you to do.
Yeah.
And everything aligns. Sometimes you may have to do 2 years at a B lender.
Yeah.
But yeah.
Okay. So how did you get into this?
Okay. So I started out in the IT field. I was a database administrator, and then they were downsizing. So once I was let go, or what do they call it, laid off?
Yeah.
I said, I don't want to do this anymore. I don't want to work for somebody else where they could take all that work that you put in and just say, thanks for coming out. We appreciate you. Peace out. Yeah. I wanted to build something for myself.
Yeah.
And it took me a while. I was like looking at different avenues, different things.
Yeah.
And I ended up moonlighting, I guess, as a photographer, just having a good time while I figured out what I wanted to do next.
Yeah.
I was doing some video and things like that. And I was working for a realtor and a mortgage agent. And just being there every day, watching what they do, it inspired me to say, hey, I think I could do this. And I would definitely look after people and make sure they were okay. And that's how I got started. So I went out and I did the course. That's how I got into this.
Okay. Did you face any unique challenges when you were getting started?
You would be shocked at the mental, I guess, almost fear of not having a steady 9 to 5 and going to a income source where it's all on you. You eat what you kill. So if you do not go out there and generate business, you could starve. So there is a shift that has to happen. And that first year, it was like, it's almost like you're in fright for the whole time. And then you realize, no, it's going to be okay. You're doing what you're supposed to do. You're good at what you do. You're dedicated to your craft. You are looking after people. People are learning about you. You get your name out there. And then eventually goes away. But that first little bit, that transition from a steady 9 to 5 to, something that's commission based was a bit terrifying.
Weren't you scared when all this was happening?
I was, I still had my package, so it was a little different, but it was like, man, I need to go out there and get a deal. This is starting to, shrink, So there was a bit of fear.
So you say that you took the course. What does the course entail? What does that look like? How long does it take you to complete it?
So I did the 5-day course at RIMIC. It's 5 days in class. I know they let you do it online now, or if I think it's like 1 day in the weekend. There's multiple ways you could do it, but it's through RIMIC, and I think it was like a $500 back then. You get your textbook, you read, and you have to pass the exam. So once you pass the exam, you have to go out there and go and work with a brokerage. And then once you're with a brokerage, they get you your license, you get your errors and omissions insurance, and hopefully, I would say, get a mentor.
Yeah.
Get someone that will show you the ropes, because coming out of the course, you know nothing.
Yep.
the game is so vast and there's so many levels to mortgages. You need to be around someone who could teach you and show you all the loopholes and the pitfalls that you need to avoid. Yeah.
True. You've been in this industry for a couple of years now. I was listening recently to a CNN show called, I think, African Voices. And there's this actor by the name of Jimon Onsu who was interviewed in the show. And the guy said that I've been in Hollywood for about 20 years and I still struggle as a Hollywood film star, being in blockbuster movies and, in this big films that have, earned my white colleagues a lot of money, and I still struggle. So do you see this in this industry? Do you see black folks struggling in this industry as well? And this could, maybe it would be different in Canada, but as opposed to the US. But what would you say about that?
From my personal experience and what I've seen is, I've seen all levels. I've seen black people who are doing really well, extremely well. I've seen black people who are okay, and then I've seen black people who aren't doing well at all. In my journey, I've seen that we typically gravitate to more of a private style of mortgage. And I don't know why that is, and I'm not a fan of that style of mortgage, where you're meeting people when they're at their worst, and then you charge a fee. I don't like that. I'm not saying I won't help you. I will definitely help you and get you back, but that's not where I want to be. I want you, you're just graduated school and, you're excited about your new home. You just got married and you want to go out and buy a new home. You're thinking about investing and I'm walking you through it. I don't just want to be on the low end. I want to do good things as well. People who have money and are able to invest and show them how to invest. So I did a lot of taking regular homeowners and turning them into real estate investors. And I really enjoyed that portion of the business a lot. And it's tough to find a mentor from our community that will teach you how to do that. And then I'll notice that there's a lot of other communities who will establish a brokerage. And now they have a brokerage where they and their community could, go and get mentored and be taken care of. I don't see as much in our community as I would like.
I think that's concerning.
Yes. And then the next question is, well, why don't you start it?
True. Why don't you start it?
I did have a team.
Okay.
And I did help a bunch of agents get started in the industry. I was coaching for a while.
I think that's beautiful.
And I'm still I still always help and coach and I share information. Each one teach one.
I think which is what you're doing right now here too, right?
I'm trying, yes. But I find that it's difficult because people say they want something and you invest all your time, which you could be using to do your business, and you invested in them, and then they say, this is too hard, I don't want to do it anymore. And it
must be very discouraging.
It's heartbreaking because you just put your energy in them for a year, sometimes 6 months, sometimes more than that. And this, in a blink of an eye, they say, I don't want to do this anymore. And it's kind of discouraging.
I feel you, man. But, apart from the discouraging part, what's the most rewarding thing about this job?
Honestly, the people. You meet them in all walks of life. And this is the thing that people don't really understand. Mortgages is a people business. A lot of people think numbers, interest rates. I spend my day managing emotions. People come in, Jeremy, I don't know, I'm closing in a week. I say, don't worry about it. Give me all your problems. I got it. I'm going to take care of it. I'm going to get you across the finish line. So I find sometimes even at the end of the week, I'm tired and I'm like, wow, what is it? I'm taking everybody's emotions and I'm saying, don't worry about it. Give it to me. I'll carry it for you. But it's very rewarding because I remember when you just came here and you didn't have your PR and you weren't sure how you would get into the home. I remember when you lost your job and we helped you get a line of credit so you could, get through the storm. There's so many different situations where you've helped people and they remember you and you remember them. And I love it when I go out in the community and they're like, oh my God, Jeremy, Christmas time, you know, sending cards, bottles, cake, all kinds of things. And you know you've done a good job because they remember you.
Yeah. True. I do agree. I think that's very rewarding when you remember what you did, all you did, and most importantly, when they remember you too.
That's
right?
Yeah.
Is there a mistake that you've made in your career, and what did you learn from that mistake?
Oh man, that's a good question. And the one that stands out to me and that still haunts me to this day is recently when the rates started going up. I was listening to the Bank of Canada and they were saying, no, don't worry, inflation is transitory, meaning it's just passing. It's going to be okay. We aren't going to raise rates. So people called and they were saying, Jeremy, should we lock in? I'm on a variable. Should I lock into a fixed mortgage? I'm like, no, Bank of Canada said it's going to be okay. Then they give us your first rate increase. And you're like, okay, I mean, it's just one. It's not, don't get afraid. Don't worry about it. Are you sure, Jeremy? I said, no, don't worry. Then Bank of Canada just started raising rates. Bam, 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 bam.
Before you know it, it's at 12%.
Yeah, now it's like you can't lock in. You're at the peak now. You have to ride this out. And I felt like I let my clients down because I didn't foresee that happening. And that actually encouraged me to get more into what's happening globally. So watching what's happening in the world, watching what's happening to rates and understanding charts on a deeper level. And it just forced me to up my game because when people are depending on you, you don't want to let them down.
True.
Yeah.
What did you learn from this?
Oh man, don't listen to the Bank of Canada. Do your research. And in hindsight, it's common sense. Rates are at the lowest I've ever seen it. We had 0.99. When have you ever seen that? If you don't have any plans of breaking your mortgage, lock in. Lock in. It's not going to go any lower. I should have been telling everybody, hey, man, now is a good time to lock in.
People say it's going to go to negative at some point.
Right. The way it was looking, right? Yeah. And so in hindsight, I would have told people to lock in if you didn't have any plans of breaking your mortgage or making any changes. So that is one thing that bothered me for a long time.
If you would give any advice to your younger self, what would that advice be?
I would have started this earlier. I would have started this when I first came out of school. I wouldn't have done IT. I would have skipped that whole database administrator portion of my life and went straight into mortgages.
Is there any piece of advice you've received from somebody? And, what was that? And how did it help you?
Most recently, during the Christmas, I was at a few events. And the owner of my brokerage, he was with other members that knew him from his, walk of life through the financial industry. He worked at several different banks. And the common theme that they all said, because it was weird, there was times where one was a manager and the other one worked underneath them. Then the other one got promoted and then he brought the manager over. So now the person who was the manager now reports to the person who used to report to him. And the thing that they all said was, there's no ego. Just do what's right. Because the way it works is it's a cycle and it comes around. And they're all still really tight and they're really close. And I was like, I like that, No matter how successful I get, no matter how much money you make, just be humble. And, always help a person, no matter where they're at. Do what you can,
to help them out.
To assist.
True. So there's a question here that was left by the last guest on the show. And that question normally goes to the next guest on the show. And so that question for you was, when does it stop?
That's a tough one.
You can think about it.
No, because there was a moment where I was almost going to stop. And to be honest, it was 2021, April. My dad passed away. And that was my best year. I had the most units at my brokerage. And I worked hard to accomplish that. Like I started coming from a field that wasn't financial, I felt a lot of people were doubting me, and I was really working hard, staying here on Saturdays, Sundays, doing 7 days a week. I really put the work in. And my dad used to call and say, son, you don't come over for dinner anymore. I haven't seen you. I said, Dad, I'm working. I'm trying to like show these guys that I'm worthy. Like I belong here. I could do this. He said, I understand, but you got to always remember, like, life's not promised. You got to spend time with the people you love and your family. And then just one day he got sick. He had COVID. And then the next thing I knew, like a week later, he was gone. So what I realized was, all these awards, all this money, all this acceptance, or to show people that you belong didn't mean anything. I would give it all back for just 5 minutes with my dad. And so when you say, when does it stop? As soon as possible. As soon as possible.
Yeah.
As soon as I'm able to create a life where I could just spend the majority of my time with the people I love, doing the important things that matter, I'm out of here.
Yeah.
Yeah.
I think that's important.
It is. It's everything.
Yeah, knowing, when you want to do it and what those conditions look like.
Yes.
And also my condolences to you.
Thank you.
For the passing of your father.
Thank you.
Jeremy, it's been nice hanging out with you. And now I'm going to give you the same opportunity that, our most recent guest had. You're going to write a question here for the next guest on the show. I don't normally see these questions until I'm seated right next to the next guest on the show.
Right.
And so here's your opportunity.
So scroll up?
Yep.
Okay.
Jeremy, is there anything that you wanted to say that I didn't ask you, or something that you feel like you want to share with our audience?
Sure. If your mortgage is coming up for renewal, do not sign the renewal until you speak to a mortgage professional. Too many people are leaving money on the table. Typically, the bank doesn't give you the best rate right away. Even if you have no intention of leaving the bank, you love your bank, no problem. Speak to a mortgage professional. We could write a letter showing these are the rates that are out here. You got to do better than what you offered the client. I've saved clients so much money over the years just by writing a quick letter. They take it back to their bank. The bank says, okay, we don't want to lose you. And then they all of a sudden have a better rate for you. So if you know you're coming up for renewal, feel free to reach out to me or another mortgage professional and get that done. Yeah.
True.
Yeah. And today's day, every dollar counts, like every cent. So
I do agree.
Yeah.
I do agree, man. There's a couple of years ago when I had so much money lying around, I didn't care about the cents, the quarters that were around my house. Yeah. And right now I see any quarter on the floor, man, I'm picking it up and putting it in that piggy bank real quick.
That's right.
Yeah, I'm going to put Jeremy's details in the description to this video. You can always reach out to him. What's your Instagram, Twitter, any of those details? You want to share that with the folks out here? Of course, I'm going to put them down in the description.
Sure. Everything is at Mortgages by Jeremy.
Yeah. Mortgages by Jeremy. And this guy's going to get you your home, probably your first home, second home, third home. That's right. You invest in property, all that kind of stuff.
Everything. And if you're not ready, I'm going to get you ready.
Yeah, if you're not ready, it's gonna get you ready. Do you hear that? Right. So you probably, and what does that look like? They don't have the income yet. Yes. They don't have the, credit, they're not a good place, the credit, all that.
We'll repair that. We'll get a plan together. We'll get you ready.
Yeah, man, you're doing good work out here, man. May you continue doing that. And I also want to say that this Black History Month would not be the same without you, Jeremy.
Thank you. I appreciate that. And same for you for even doing these podcasts and sharing this with other people. I appreciate the opportunity.
Yeah. Thank you very much, Jeremy.
Thank you, Joab.
This has been The Couch Connect. My name is Joab. Today, I've been hanging out with Jeremy Gayle. Jeremy Gayle is a mortgage specialist. He can help you get ready for your next property. If you like this pod, do subscribe to this channel and do like the pod. You can also tell your friends to tell their friends. Till next time, do take care. Kwaheri.